Good morning, this is Steve O'Hare from Signal Centre, and today I'm going to run through the energy sector. We're going to look at WTI crude oil, Brent crude oil, and also going to look at natural gas. I'm going to run through the time frames from the longer term, the weekly charts, down to the 4-hour charts to give you full colour on the technical levels, formations and indicators that we're watching. Here we go with the weekly chart. So on the weekly chart, we've seen this Elliott wave, 5-wave move higher. It's an impulsive move, and we've hit resistance, which is from previous swing high back in October 2018. That comes in around 76.80. We stalled just in front of there, and last week we saw a doji candle, which is a sign of indecision, so potential for a reversal. And we should really look for confirmation of this with a close below $70 on the weekly basis, but we're not seeing it yet, so there is still potential for a little bit of a retest of this resistance band. On the daily chart, we can see that 76.35 was the recent swing high, and we had a move back down and reacted from just in front of $70. And then we're sitting here nicely at $74. Today we've got EIA inventories, so that will add some volatility to it. We got the OPEC plus nations looking for to increase output, which would have a negative impact on oil prices. However, there is OPEC standing firm on that and not wanting to go ahead. So until that's resolved, there will be some volatility that we should see in this. So on the weekly and daily charts, Brent crude very similar, and even on this, let's get rid of that. Even on the shorter term charts, we've got the reaction higher. Obviously, Brent trading at a premium to WTI. 71.71 was a low, and we've had the reaction higher. And up here, we've got support, resistance coming in at 77.44. Again, we're pretty much mid-range. The long-term, medium-term, short-term trend is higher, so buying dips is the favoured way to go. News sentiment is very positive on oil at the moment, so yeah, it looks like we'll have to wait until the EIA comes out this afternoon, and then we'll see how it settles down after that. Natural gas we've talked about as well. We broke out of this triangle formation. This is the daily chart, the triangle formation, and we hit a top around about 380, and then swung back at the same time that oil was getting sold off down to 350. So they're the two real levels to watch. Let's take it down to the 4-hour chart to give you a little bit more color on this, and you can see we're in this sort of natural range. We've just peaked out at 375 and held at 365. Bearish engulfing or bearish outside candle possibly forming on the 4-hour chart, so that'll be negative. Really need to get a break at 365 before it opens up a retest on 360, then 350. Above here we should see resistance at 375, then 380. But again, long-term, medium-term in an upward trend, and no real sign of that slowing down. Thanks for joining me, and look forward to catching up next week.